Welcome to the Financial Technology Report, a leading information source on financial technology companies and solutions. In this episode, we speak with John MacIlwaine, co-founder and CEO of Highnote, a payments technology company offering a unified platform for embedded finance. Founded in 2020, Highnote enables enterprises and fintechs to issue cards, accept payments, manage credit, and track funds through a single API-driven system. The platform integrates issuing, acquiring, ledgering, and real-time money movement to help organizations design, launch, and scale their payment products more efficiently. Before founding Highnote, John held senior executive roles across technology and financial services. At Highnote, he focuses on advancing the company's platform and strengthening how businesses deliver modern payment experiences to customers. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. John, great to be with you. Thanks for taking the time.
Thanks a lot, RJ. Good to be here.
So looking at your background, I refresh for these interviews. You've worked with like the who's who in fintech, with Visa, Lending Club, Braintree, et cetera. Tell us a little bit about your background and then leading up to Highnote.
Yeah, sure. So I've had the fortune of working in my career in both large and smaller type companies, all in different areas of financial services. So early on, I was the business that was the very first online brokerage company way back when. And from there, I sort of moved into other areas of financial services. You mentioned Lending Club, which is obviously in credit. Visa was a great experience, very large platform and global business in transaction processing. I ran all global development there. So really was able to see how systems run globally in real time at scale and how impactful payments and innovation can be really across the world. And so that was a very rewarding experience. From there, I was part of Braintree, as you mentioned, which is PayPal's acquiring business. And so even got further into kind of how merchants leverage technology and leverage capabilities in the acquiring side of payments. So when we looked at starting up Highnote 5 years ago, the premise was really around building a better payments platform for businesses that wanted to move faster and innovate, but still differentiate. So still create something that can drive competitive advantage, could drive revenue. And sort of 5 years ago, and even before that, there were a lot of legacy systems in the ecosystem that, in a sense, were built to sort of process transactions at scale, but really weren't designed to keep up with the pace of innovation occurring on the front end. So lots of interesting things were happening with consumer experiences in the payments realm, in new business models like DoorDash and Instacart, really leveraging the ability to implement payment methods without necessarily having to partner with a large bank, which takes a long time, has a lot of friction, is expensive. And then the back-end systems, the processing systems were legacy. And so we thought, hey, there needs to be a better way to enable innovation to occur on the front end, but all the way through the transaction lifecycle. And to do that, we set up Highnote as a product platform, not as a processor. Some people think of Highnote as an issuer processor. You may hear that term. We do that, of course, but it's really about creating a product that allows customers to innovate. So we're not on the receiving end of requests for feature development from customers, because that tends to slow customers down. They're waiting for us to build them a feature. Rather, we have an enabling platform that pushes the innovation out to our customers so that they can move very quickly, differentiate, compete, drive revenue. And we handle everything else from a platform perspective. We handle the banking partnership. We handle the regulatory and compliance in partnership with our customer, but really allowing them to move quickly and to differentiate. And that's what Highnote is all about. And maybe in this discussion, we can get into a little bit more detail, but my background sort of led to that thinking and awareness that it's the right time to create this product platform. And luckily, I was able to partner with my co-founder and CTO, who has been with me for 15 years. And we've sort of gone through the journey together and thought, a lot about how to do this. And it's quite difficult to do. You can't just have the greatest engineers. You really have to have engineers that understand payments, that can come in and really think about how to build a general ledger at the core and how to manage pay in and pay out and really all of the different idiosyncrasies of payments building that platform at scale is what customers want, demand, and what we're seeing in terms of our traction and momentum.
And so is it really the platform you lead with, or is there a point solution that is solving the most acute problem for the client that you actually enter the relationship with?
It's a really great question. The sales cycle, because we're a horizontal platform, meaning we're not specifically in certain verticals, we really target customers that have fairly similar problems. They're either with an existing provider and they can't move fast enough, or they have a new use case and they've gone to their existing provider and the response has been can't do it, or it'll take a year, or it'll be really expensive. So we see a lot of those. We also see businesses that have large customer bases but don't have card products. And so we're in the mix with other competitors. And when they look at how we've designed the platform, how we think about the general ledger, data transparency, the fact that Highnote doesn't sit on top of another gateway. We don't have any providers in the mix. We are straight to the sort of the networks, and we bring the bank as well. Then they begin to see like, oh, well, we can not only solve our point solution to our business case, but we can expand this. We can start with issuing with Highnote and then expand into acquiring, or expand into instant payouts, or add consumer revolving credit. And so when you look at the platform, we're not a one-stop shop. It's really about driving revenue quickly, but also allowing businesses at scale to continue to partner with us in areas that allow them to grow revenue. And so it's a long way of answering the question that it's really about the openness of the platform that drives innovation and really drives revenue for our customers. And that's really been the key point that's been resonating with our customers is like, hey, this is a platform that was built the right way, doesn't have legacy infrastructure, doesn't have a lot of delays and friction in terms of how to get integrated. The engineers, the engineering and technology teams from all of our customers love us. We really never lose any deals on the technology. And so getting across that and demonstrating value early has been why I think we've been able to grow so quickly.
You would think like some of these big financial institutions like a JP Morgan has a lot of competitive advantages. I'm probably understating it, but the JP Morgan payments, they seem to be heading big into the fintech area. How do you view them? Are they a direct competitor? Do they overlap in certain areas?
Yeah, I mean, the large banks and in fact, the large processors actually represent opportunity for Highnote versus direct credit. We're never going to go and take out JP Morgan from an existing customer, large customer, in my opinion. But what we will do is we'll go in and sit right next to them and demonstrate that, hey, we can light up new use cases. We can unlock new revenue opportunities for a business that's already using Chase or anyone else. And it's really that angle that gets us in the door, if you will. And then as we demonstrate value, more and more of that volume, that payment volume can move over to Highnote. So it's really not about displacing or immediately doing a big cutover or migration from one of the incumbents. It's really about demonstrating value, driving revenue, and proving that this platform is the platform of the future for businesses that want to differentiate, want to compete, but want to do things differently and open up new business channels. That's where Highnote fits in. It's not about having an infrastructure that is just cranking through gazillions of transactions a night. Like that's important for banks, but the innovation I think is only accelerating. And certainly with all the different innovations that are occurring around the world, payments is right in the thick of it because that's at the heart of making everything work, in my opinion. And so it's important to have a modern platform that is continually pushing the boundaries, opening up new doors for businesses of all sizes. And that's what Highnote's all about.
And I know you've been having great success with partnerships and new clients coming on board, like sizable clients. What's a good example to help showcase kind of how a business is able to enhance revenue by partnering with Highnote?
Yeah, there's a diverse set of customers across several different verticals. We just recently signed BNY Mellon for Highnote to sort of embed our technology to pay all BNY's corporate bill pay customers, and recognizing that, of course, BNY's been doing this for a long time, but they didn't have a platform that could support virtual card as well as the other payment methods in quite the way that we did. Now, we're not ripping out all of the BNY infrastructure, but a great example of how we're sitting right next to unlocking new capabilities to serve their clients at very, very large. This is a US top 13 bank that has partnered with Highnote. That's one example, all the way to maybe another example where We are the provider of a couple different disbursement capabilities, meaning using Highnote to send funds out to staff of, say, BJ's restaurants all around the US. So the tips that get dispersed for the staff there, they're all distributed and dispersed on Highnote cards. That allows businesses to not have to facilitate tips through payroll or have people wait. They can actually get their tips on the first day of work at a BJ's restaurant, all distributed on a Highnote card. And then one that's actually quite timely in terms of what's going on with the government shutdown. We've had a partner called GiveCard that's been on board, one of our early customers, and they have stepped in, at least in San Francisco, to provide these SNAP benefits that have been halted because of the shutdown. They signed a deal with the city of San Francisco to provide disbursement to hundreds of thousands of people that otherwise would not have had funding to pay for groceries and things like that, all on Highnote cards through a partner called GiveCard. So that's a great way to sort of provide benefit, but it also demonstrates the sort of diversity of our platform in lighting up different use cases, both large institution, commercial, and consumer disbursement, and those kind of use cases continue. So it's pretty exciting where things are headed.
Is there a cutoff in terms of like the size of organization that benefits the most from Highnote?
Yeah, back in the earlier days, we were talking to a lot of early stage companies. I would say, to be honest with you, as we've grown, the value that we can provide to customers obviously increases based on the size. So we're sort of selling now into mid-market customers and large enterprises, and sort of tilting more towards large enterprises because frankly, they see the benefit in the economics in terms of being able to compete, drive revenue faster. But also, we haven't even really stepped into this yet, but Highnote is not just in the card issuance business. We're also a full stack merchant acquirer processor. So we handle both the issuing and the acquiring, all based on the general ledger. And without getting too detailed or complicated in terms of the payments model, if you can acquire the card that you issue, there are tremendous economic benefits to customers that are partnered with you. And instead of having multiple different vendors providing issuing and acquiring and instant payouts, Highnote does all of it. And so the expenses are collapsed, but also the complexity of managing multiple partners and payments is also collapsed because it's one provider. And so we feel like those benefits really hit home for large enterprises that are doing millions and billions of acquiring transactional volume per day. That's where Highnote can really shine. And, we just announced a major partnership with an existing issuing customer called Netevia, who has an extremely large acquiring business. They partnered with us early on to provide issuing capabilities, but now they've just signed a 6-year agreement with Highnote to provide acquiring services. And we're talking, billions and billions of volume. And that's gotten us off the ground here and running on the acquiring side. So the model is sort of playing out. The thesis is still there. We have not pivoted our company, our strategy since 5 years ago. It's really been demonstrating to more and more businesses that are getting larger and larger how partnering with Highnote can really change the game for these businesses.
And it seems like you're sector agnostic, including government.
Yeah, government's pretty tricky. It's difficult to work with, but we have customers that have found their way in. And once you sign with the government, there's a lot you can do. It's hard to get signed. So I'm not saying that that's simple, but once you're in, there's a lot of different capabilities to provide payment services. And so just to be clear, we are a platform that sells into, it's B2B, sells into customer, our subscribers, we call them, that then do these deals. And so as they build their businesses, that benefit also then accrues back to Highnote. So it's a really great model to be able to partner with the kind of the best in class across multiple verticals in order for them to continue to grow, drive momentum, be competitive, raise the bar in terms of the expectations and the capabilities, all based on kind of the underlying product platform at Highnote.
Can you give us a sense for the scale of the business currently?
Yeah, I mean, we generally measure growth from a top line perspective on what we call TPV, or total processing volume. And I think we finished last year around 2.5 billion in volume. This year, we're on track to finish at closer to 4.5 to 5 billion in volume. And then the economics flow down from there in terms of interchange fees, and we share that back to our customers. But in terms of who's using the platform and the sense of demand and growth, we're on a really good trajectory right now. And those are the top line numbers.
And you've brought in a good amount of capital. You've got top tier investors. Can you tell us a little bit about how your investors have added value beyond financial capital?
Yeah, I think we were fortunate back 5 years ago when we raised our seed round of funding, our initial round of funding. We sort of took a pretty prescriptive approach to sort of looking at partners, that were going to be in it for the long term, obviously very well respected and understood payments. It was important to me, given our model at Highnote, you need to understand payments, the payment ecosystem, and the benefit that the vision that we had in terms of issuing and acquiring, how big of an idea that is and how difficult, challenging, but opportunistic the plans were. And so we were able to partner with more of a traditional seed stage investor called Costanoa, but also a growth investor called HCFT from New York. And Oak at the time really wasn't doing a lot of seed stage, early stage businesses. They're really more growth, Series A and Series B. But bringing them both together to co-lead the seed investment was really important and great because we knew that we can benefit from Costanoa because they had the full support for early stage businesses in terms of getting off the ground. Oak was able to help us open up doors with the networks or MasterCard and Visa, make those. Although I worked at Visa, so I was able to sort of leverage some of those connections as well. But it doesn't hurt when you have, large institutional investors at the table saying, look, these guys, they know what they're doing. They've got the execution capability. They've got the team. They've got the vision. And that allowed us to quickly, as an example, sign with First MasterCard and get directly integrated to their network for processing because we didn't want to sit on top of another gateway, right? Because that collapses the value proposition because you can't move fast if you have to rely on some other partner to do something for you. So we wanted to go direct to the networks. Then we quickly connected with Visa. And so I'd say to answer your question, in the early stages, it was that type of help support that got us off the ground and running. And then, of course, both then led our Series A round of funding, and Costanoa participated. And then we just did a B round late last year, and we brought in Adam Street Partners, which is a fantastic investor, really understands payments. And of course, all the other investors participated heavily in our Series B as well. So it's a small group of investors, but they're, I think, highly respected and also very knowledgeable in payments and able to really support the vision and help us get where we're going faster.
You're in the rapid scaling phase. I'm curious what your leadership philosophy is. I mean, key people are critical to making sure you keep pace. How do you think about your team and your culture?
My philosophy on this, I think maybe I learned through my career, but how I looked at Highnote in early days, we had nobody, it was me and my co-founder. And so we're building up the team, as you said, and rapidly scaling. Of course, we needed to bring in executives. My view on this is to always hire executives who can stretch down in the role, meaning hire leaders that have been through large scale or have come from large, successful businesses, but can stretch down, meaning can roll up their sleeves and build their teams, get into the weeds, pay attention to detail, pay attention to execution. And then as we grow, then the jobs look more and more like they had before they came here, which is managing teams. Some people would say, and these are smart people, I'm not saying it's wrong. Some people would say, hire for the point in time that you're at, hire for people that are used to Series C or Series A type businesses. And for me, the problem that leads to is I knew we were going to get big and grow. Then you sort of have to look at, well, now we've outgrown this particular leader, then you've got to go through the transformation of, replacing, removing, shifting your leadership team. And that causes a lot of disruption, stops momentum. But if you can find people that are willing to, in my opinion, stretch down and then grow, then you can keep that team together. And so our executive team has been with me for 4 years now. We haven't replaced any of them, and we don't need to. Like, these are people that have run big divisions at WEX, big divisions at JP Morgan Chase. Like, this is not something where they're learning. It's really about helping us get to that level of scale by building out their organizations, delivering. This is a delivery company. Like, it's all about execution here. We don't have middle managers. We don't have any of that. So 60% engineering and product. Operations is heavy because we're not a regulated entity, but by extension of our bank partnership, we really have to be super buttoned up on compliance and regulatory and risk. We have a very, very awesome team in compliance and risk and operations. And, then the rest of the functions build up from there. But that's really how it's constituted right now.
I would think it's quite difficult for someone who was formerly in a senior position in a corporation to stretch down and roll up their sleeves. It could have been 10 years ago.
Yeah, that's right. You have to want it. You have to put your ego at the door. Like, this isn't about make me some C-level because I feel like I've earned it in my career. That's fine. Like, if you want to do that, go work for a big company. That's great. But if you see the vision and the opportunity for where this company is going and you want to be part of it, and you're not afraid to sort of build it, like a lot of the benefit of Highnote is that we've brought in people that have gone through and seen mistakes and have seen how things were done the wrong way. Me, I'm a great example. Like, I worked at large companies and I saw like, hey, we don't have a general ledger here, and this is a huge problem. And gee, if I did this all over again, like, I'd probably start with the general ledger. So guess what? That's what we did at Highnote. We started with we didn't even build a processor. We started with the general ledger. It was the first thing we built. Then we built the processor. Then we built program management capability. But across other domains, sales, operations, risk, marketing, people that have that experience that come in, they know what the battle scars are. I think most people would believe that if you see that and you can do it again the second time or the third time, it's much, much better because you avoid a lot of those pitfalls that you experienced. And so that works at all levels, not just executives. Engineers feel proud to work here because they're not inheriting some legacy old thing that they have to work around, right? In payments, there's a lot of legacy platforms that you can join and they're exciting, but you have to kind of work around the data model and the architecture, and it slows you down. But at Highnote, it's vanilla. It has been vanilla, and it's done the right way. It's clean, it's pure, and it feels like something that's different than anything else out there. And as a result, we get the best and brightest on engineering and product because they know they're building on something that's foundational, that's solid, and can scale. And then when they see large customers like BNY and others say, that is the platform that's going to take us home, then that's even more rewarding as well, to see that validation in the market. That's really important. And we're seeing that and living that as we grow.
Last two questions. One is, can you tell us about a person who has had a profound influence on you?
Okay, this is has nothing to do with payments. I'm a huge music fan, and I grew up listening to old Genesis and Peter Gabriel, and I became sort of this follower of Peter Gabriel in terms of the music, his use of technology in music, and a lot of his outlooks as he progressed in his career. And so one of the quotes that I always say that came from Peter that I tried to sort of think about and maybe share with my kids went like this. It said, be brave, don't be afraid to take risks or make mistakes, and stay sensitive to other people. If you can build strength inside you, then the outside world will respond. And so I use that a lot, or I think about it at least with my kids, and I think it's a good lesson. So I always say that that's why the individual that's had a profound effect.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
I would say that, my dad passed away from sort of dementia, Alzheimer's, and I feel like there's a lot of progress in the field, but not enough. And as I get older and as the world, at least the US, and I think around the world, the aging population is certainly in front of us. It sure would be great to help these scientists and doctors and researchers figure this one out. Of course, cancer as well. But I think both of those are important, and we look to try to help out there where I can.
John, thank you so much for taking the time. It's been a great conversation.
RJ, loved it. Appreciate it. Thanks a lot.